Are you an investor looking to grow your real estate portfolio? Well, here's a powerful loan program built just for investors. It's called the DSCR Home Loan. And today I'm breaking down exactly what it is, how it works, who qualifies, and whether it could be the key to scaling your real estate investments. A DSCR loan is a type of loan specifically designed for real estate investors to finance rental property. Unlike traditional mortgages where the lender is focused on your personal income and debts, no tax returns, W-2s, or pay stubs are required. Emphasis is on the property's cash flow. These loans appeal to real estate investors relying on rental income for mortgage payments. By using the property's cash flow as the main qualification factor, DSCR home loans provide real estate investors with the opportunity to purchase and finance rental properties more easily. If you're serious about building wealth through real estate, make sure to hit that like button, subscribe, and stick around until the end because I'll share some insider tips on how investors are using DSCR loans in today's market. Don't sleep on this. This loan can change your entire investing strategy. I'm Pauline Lee, a licensed mortgage loan officer and real estate agent. Connect with me for a no-obligation consultation. I encourage you to get pre-approved. So let's decode the acronym first. DSCR stands for Debt Service Coverage Ratio. It's a metric lenders use to evaluate, will the rent income from the property cover the mortgage payment and other expenses? Unlike traditional loans where the lender focuses on your personal income and debts, DSCR loans focus on the property's rent and expenses. Instead of judging you personally, they judge the deal. Lenders look for a minimum DSCR of 1 to 1.2 times, which indicates that the property can support itself. A DSCR above 1 indicates the property covers its expenses and looks strong to the lender. A DSCR below 1 indicates the property is not cash flow positive. I do have lenders that will approve this. You'll have to come up with a larger down payment and show more reserves to strengthen the deal. Here's how it works. Let's say you're buying a rental property and the projected rent is $3,000 per month. If your mortgage payment, including principal and interest, taxes, insurance, and HOA fees is $2,400 a month, your DSCR would be 1.25 times. That means for every dollar you owe, the property generates $1.25 in income. Lenders typically like to see a DSCR ratio of 1 time or higher, meaning the property at least breaks even. The stronger the ratio, the better terms you can usually get. Remember, the approval is based on the property, not your job, not your tax write-offs, not your income structure. By the way, if you're finding this breakdown helpful, drop me a quick comment below with the city you're thinking about investing in. I'd love to tailor more content to your market. Who qualifies? DSCR loans are specifically for real estate investors, not for buying a primary residence, as the lender is looking at the property's rent income to repay the loan. Most lenders want the investor to evidence that they already own their primary residence or can provide a lease to evidence they are living somewhere. Some lenders will allow first-time home buyers, but they will need to make reasonable assurance that you don't intend to move into the subject property. The typical borrowers I see using DSCR loans are self-employed entrepreneurs with complicated tax returns, investors who already maxed out on their conventional loans under Fannie Mae or Freddie Mac conventional programs, and buyers who want to use LLCs or partnerships to own the property. Sometimes referred to as rental loans, DSCR loans are a great option for real estate investors in the business of acquiring rentals and wanting financing that doesn't slow them down. This smart financial tool can help maximize rental property potential and increase passive income. There are flexible options for purchasing, refinancing, and cash outs. Fixed ARMs and interest-only products are available. Minimum down payment can be as low as 15%, but 25 to 30 is ideal. It depends on the purchase price and monthly expenses of the investment property. FICO scores can be in the 600s, but 700 plus will get you better terms. Foreign national borrowers find this a popular finance solution. The beauty of DSCR loans is that approval isn't tied to your personal income. It's tied to the deal itself. If the numbers on the property make sense, you're in business. If you're not sure whether you would qualify, grab a quick discovery call with me. No pressure, just strategy. Now let's talk about the pros and cons. Benefits. No personal income documentation needed. No W-2s, no pay stubs, no tax returns. The loans are easier to qualify because only the property needs to qualify. Many lenders allow multiple DSCR loans, and you can often close in an LLC or business name. The trade-offs: higher interest rates and closing costs. A minimum down payment of 20 to 25% is typical. And some lenders require higher reserves, especially if the deal is marginal. So while these aren't the cheapest loans, they're incredibly powerful for the right investor who values flexibility and speed. Let me give you a couple of real-world examples. I recently worked with an investor who was self-employed. He was hitting a wall with traditional banks. His tax returns showed a lot of write-offs, so income looked low on paper. We used a DSCR loan for this purchase. The property rented for $2,200 a month. The mortgage payment was $1,900, so the DSCR was 1.15 times. The lender approved it with no questions about his W-2s or income. That's the magic of DSCR loans. They focus on the deal, not your personal paperwork. Here's another example. I work with an investor who has several rental properties, most with equity as it increased in value over time and with improvements. He was looking to buy the next one, but wanted to hold on to his savings as he intended to continue improving his rental properties. We did a DSCR loan to cash out equity from one of his rental properties and applied the unlocked equity towards the new purchase, which was also funded with a DSCR loan. Again, no personal income and debts were considered. Appraisals were done to validate market value and rent. The mortgage was structured based on that. No W-2s or tax returns. And the investor added another cash flowing property to his portfolio. If you want me to run the DSCR on a property you're considering, send me the numbers or book a quick call below. I'll do the math for you. So let's wrap this up. DSCR loans are an incredible tool for real estate investors who want to scale quickly and avoid the red tape of traditional financing. If the numbers on your property work, the loan works for you. It's that simple. Is a DSCR loan right for you? If you're an investor looking to buy rental properties and you don't want to deal with traditional income documentation, this program is a game changer. If you learned something new today, give this video a thumbs up. It helps more investors find this info. Don't forget to subscribe for more weekly tips on mortgages, real estate, and investing strategies. If you're ready to explore DSCR financing for your next rental property, I'd love to help. I'll give you a link below to schedule a free consultation with me. I'm Pauline Lee, a licensed mortgage loan officer and real estate agent. Connect with me for a no-obligation consultation. I encourage you to get pre-approved.